All right. Thank you for joining us, everyone, on another episode of Empire Interviews. I'm really excited for this one. I'll be with Tony Edward today, the founder, I believe, and host of the Thinking Crypto podcast, and also has a book coming out. So we're going to be talking about all of these things. I want to touch on a little bit of what he thinks that the future of crypto looks like, and see if he's excited, because I feel like a lot of people that we talk to here are pretty excited, and I think that so much more is down the road coming very soon. So we're going to be talking about that. Oh, all right. So Tony, how are you doing? Thank you for joining me today.
John, it's great to be here. Thank you for having me. I'm doing well.
So one of the first things that I want to know is tell me a little bit about yourself, your background for people that don't know you. I've been watching your podcast for a while. I love a lot of the content that you put out, and I've seen you on my timeline, all of the time. But for people that aren't familiar, tell us a little bit about yourself, what you're doing now. And then after that, I'm going to ask about what was your life and everything before crypto, right? And how have things changed?
Yeah, sure. So I'm neck deep in crypto. Investing. I have the podcast, as you mentioned. So I'm the founder and host of the Thinking Crypto podcast. I'm also the author of the book Rethinking Crypto: The Crash of FTX and the Rise of Safer, Stronger Digital Assets. So I absolutely believe in this technology. I'm looking to build in it in different ways. I have the podcast, I have the book, but I'm looking to build other types of businesses. I see this as being the next layer on top of the internet and what many call Web3. And I've always been into technology. So this came naturally when I saw it. I was like, wait a minute, I need to take a look at this and figure out how it works. And it wasn't even so much from an investment standpoint, it was just a technology, because I've always been passionate about tech. I wanted to get an idea of how is this different from digital currency people tried to create in the past and that has failed, and what makes it different. And then I went down the rabbit hole, read the Bitcoin white paper, and now I'm here. And like I said, I'm neck deep. I'm investing, I'm building, and excited for the future of this industry and asset class.
That's fantastic. So when was it that you first got in? When was the first time you heard about Bitcoin? Yeah, because everybody has those stories where it's like, oh, I heard about it, and it was like $1. And then I thought it was silly, so I ignored it. And then, time passed and then it was crazy.
Yeah, for sure. So I have to give a shout out to my friend Sebastian. He's the one who told me about it back in 2016. I remember it very vividly. We were at Buffalo Wild Wings. Our average Friday night with me, him, and a bunch of other friends, we go get some beers and some wings, talk about stuff, sports, and so forth. And then, of course, throughout the dinner, he's like pulling up his phone. Have you heard about Bitcoin? Have you heard about Ethereum and all that stuff? And I'm like, what is this, dude? Like, this sounds like some BS, right? I ignored him the first couple go rounds, but then he started making money. And that's when, he got my attention, because he kept showing us over time. And I'm like, okay, I need to pay attention. I need to actually listen to what he's saying. And I started researching it. And like I said, read the Bitcoin white paper, and it clicked for me. Like, wait a minute, this, the internet disrupted communication, the way we gathered information and data and so forth. We no longer go to an encyclopedia, we go to Google, right? And then how we do commerce. And then I noticed that this was the way that how value was going to be moved on the internet. And then when Ethereum came along and smart contracts, then it really exploded, because I saw the unlimited applications, and being able to program things on the blockchain and cutting out tons of middlemen. And it made sense, because I was able to analogize it, if that's the right word, to file sharing on the internet. Because I remember Napster and LimeWire, and how you had all these computers that were, you know, putting the file together, because you were pulling bits and pieces of the file from different people. So that's where it clicked for me. Oh, I get it. The blockchain is just this network of computers. And the more computers you have, more nodes and so forth, the stronger it becomes. And then this is global. It's not just the United States. It's not just Australia or whatever. It could have nodes and computers globally, and that is the game changer, and it's decentralized. So I was hooked from then, and I started investing. Of course, like everybody, you get burned in the first cycle because you don't know what the hell's going on or how to read the cycles, right? 2017. I wish I had bought more. I listened to my friend, but you live and you learn. And now I'm here on my third cycle now, and I'm much better positioned, and as far as making money and things like that.
That's fantastic. And I love to hear that. And I love that that was kind of your gradual foray into crypto. The fact that you have 3 cycles down your belt is fantastic. I'm excited for you this time. I'm sure last time was great for you as well. But I think that for the most part, it's kind of a rite of passage, and you have to pay your tuition, as some of the traders call it, right? In this space. And so almost everybody, I've only heard a very few amount of stories from people that say, oh yeah, I never round tripped, is what we call it in this space, where you have these investments, you watch them go up crazy, and then you don't cash out. So then you kind of fumble the bag until next time. And so the fact that you have 3 is amazing. I'm excited for this time for you. Tell me a little bit about what was your life before crypto? What was your career path, trajectory, or your interests? And I mean, you're a very loud voice in this space, and I'm happy to have you here. But also, I'm sure that your life before crypto was very different, probably as well.
Yeah, it's definitely been, very much around the internet and technology. So I grew up in New York, and in the 90s, we had dial-up internet, and I remember being fascinated by the internet. I was doing some things which were kind of shady in a sense of trying to hack the web. Me and my friends, we weren't, we were just kids. We were in high school and things like that. So we weren't trying to rob a bank or something, but we were trying to see how we could figure out this technology. And thank goodness it didn't go further than just playing around. But the point is, the takeaway is, I've always been fascinated by the internet and technology, and I was trying to take apart computers, put them back together, and it's kind of serendipitous how all that worked out, because later on, as I went to work for different industries, like the airline industry at a startup airline, which was based in Queens, and they were going to my home country, which is Guyana in South America. And I was the young guy. I was the guy who was into technology and computers. And of course, that opened up doors to me because, people were still trying to understand this. And I was, kind of tasked with building a website, help us build a website to start driving awareness, and leads and things like that. And the same thing happened when I went to go work in the mortgage industry. This was before the 2007, 2008 bubble burst. And real estate agents were making incredible returns and money and commissions and so forth. And same thing there. I was a loan processor, and they tasked me with building a website. And from there, though, is where my career in digital marketing started. So my background's been primarily digital marketing as I got into my adult life, where I do search engine optimization, paid search, social media marketing, email, and so forth. And like I said, it's serendipitous because that was the right timing as this industry was taking off and Google was becoming a bigger force and social networks were becoming a bigger force. So brands had to figure out a way to get on these platforms to market and win customers, of course, and get business. So from there, I started working at different marketing agencies. I taught digital marketing at NYU as an adjunct instructor. I was director of a SEO division, that's search engine optimization. I had about 25 to 30 people under me. But along the way, I discovered crypto, and I started to gravitate towards that because I saw that as this game changer, especially blockchain, as the next evolution of the internet. And while I was still passionate about what I was doing, I was just pulled in by this. And part of it was in the 90s, because I was so into what was happening on the internet and .com companies, I saw Google for the first time. I saw many of these search engines and technologies, but I couldn't participate. I couldn't make money. And then as I got older and these companies became or went public, I was like, man, did I miss an opportunity of a lifetime? But remember, I'm just a kid. I'm my parents are immigrants, right? They don't have a ton of money. I don't have a ton of money, right? We're all trying to get to the American dream. And when I notice, fast forward, when I noticed that blockchains had tokens and anyone could participate, I said, okay, this is my opportunity to get to Google and the Amazon. And thankfully, knock on wood, it's paying off in that way. I'm able to position myself. I've learned the market cycles and much more. And now, the rest is history. Now I'm here, like I said, neck deep.
Yeah, I love that. And one of the last things you said there kind of reminds me of there's this really funny meme on the internet where it's like, you know, I should have taken myself more seriously in 2009, and bought myself a house instead of being an idiot and spending all my time in sixth grade. Right. And so like that kind of reminds me of like that's how I feel about the opportunities, right, in Facebook, in a lot of these early stage web companies. Like now looking back, they were obvious. And the majority of people in the United States didn't capitalize on that because they didn't understand the tech, but we grew up with it. So
Yeah.
we would have been able to identify those opportunities, but financially being in those positions of ability to take part, we were not there. And something that I think is really important that you said as well is about the fact that crypto and these companies that have evolved around crypto have tokens that are freely available on the open market that anybody can take part in is massive, because as regulations and things in the United States have changed, one of the things is that the biggest barrier to entry and really good financial opportunities is often that you have to have at least $1 million cash in your bank account in order to be a certified investor. I mean, I know some people that, they just get a letter from an accountant that says that they have it, even if they don't. I think that's smart because we should all be able to take part in things. But I think that it's definitely a way of excluding people from opportunity. And crypto doesn't have that barrier financially.
I
Right.
I have a ton of thoughts on that. And I'll go my soapbox a bit. So to your point, right? This technology is so disruptive. It brings in a democratization for investing. And I believe that is why you saw the SEC and Elizabeth Warren and many agencies, I think at the requests of the TradFi incumbents, to shut these crypto startups down, kill them, not to kill crypto or blockchain, because it's here to stay, right? We see BlackRock and all the big banks are now adopting this technology. They're tokenizing, they've launched ETFs. So two things were happening in parallel. Crypto startups getting whacked like whack-a-mole, right? Getting lawsuits, everybody's getting Wells notices, and yet Wall Street can just roll in.
Yeah.
Here's my Bitcoin ETF. Here's my Ethereum ETF. I'm tokenizing on Ethereum. Well, why aren't they getting Wells notices, right? Why aren't they getting lawsuits? It's, I think, the age-old story of incumbents fighting against the disruptors. But we've seen throughout history, disruption always wins, right? The disruptive technology always wins because humans will gravitate to the path of least resistance as far as being able to transact faster, cheaper, and all these things, which crypto offers. But what Wall Street and TradFi and these folks have done for a long time, John, they gate, like you were saying, right? They had the gate, they had the keys to the gate. You can't get in. You have to be accredited, or you have to be in the good old boys club, right? You think about Google, you get the breadcrumbs after they go public.
Yeah.
Now, one could argue you could buy Google at in a bear market and then hold for 10 years and you're okay. But at the same time, you're not making the same returns that the guys who got in the equity side of things, which is
Yes.
gatekeep. You're not making that type of return, right?
Yeah.
And they exit when this thing goes public. They know the market's better than you. They have all the charts, the analytics. They know everything that's going on. But for the first time in history, you have a truly global asset class because of these blockchain networks that anyone can participate in. You could be in somewhere in South America, some country in Africa, in Australia, New Zealand, Iceland, wherever. You have internet connection, you have a smartphone, you could buy a fraction of Bitcoin, ETH, and whatever altcoin. And there's never been anything like that in the history of the world. Some people say, well, what about gold? Yeah, but gold's not real time. Gold is not verifiable. I don't know how much actual quantities of gold that certain central banks have in real time, right? They could easily lie. I'm taking their word for it. But the blockchain, you can't lie. And I can see the transaction real time, and it's 24/7. It doesn't sleep. There's no holidays or opening or closing bell. So this is a game changer. And that's why I believe we saw such aggression and fighting against this industry. And it wasn't because the technology, they want to kill the technology. I think it is more of, wait a minute, how dare you bypass us? We're Wall Street. We're the banks. How dare you, right? But now they're all here, right? I mean, the two things that are happening in parallel it's clear as day.
Yeah. So there are a few things I want to touch on there for sure. I will say, like, one of the things funny about like the gatekeeping, right? When we have people like Jamie Dimon for the longest time talking about how Bitcoin is only used for laundering money, right? Illicit transactions, and then his shipping container gets pulled over. There's like people and cocaine in it,
Yeah.
right? They publish news articles about this. Somebody gets slapped a fine. Maybe somebody went to jail, but that doesn't actually affect Jamie Dimon.
Right.
And then you have these kinds of rhetoric and narratives that go on for a long period of time after this, because that was not the only incident. There have been many others. But also you have the countless times that some of the largest banks in America get slapped $1 billion fine. Okay. They might have laundered 100 billion, right? But they pay $1 billion fine. I will tell you, somebody that is in insurance or that's in illicit business will tell you that that's good business. You made quite a bunch of money, and you mitigated your risk by having that fund there just in case, so that if the cops came, you could pay them off, and then you can continue business as usual. One of the things that people don't really realize also is that although these narratives and rhetorics were going on for all this period of time, JP Morgan Chase has offered custody solutions for Bitcoin for high net worth individuals since 2013. Okay. 2013 was actually the first time that I heard about Bitcoin. But I had like just gotten out of high school. I was in this like very, probably I would say like sketchy apartment with some weird people, having some strange conversations. And then somebody's like, hey, listen, the dark web, Silk Road, freedom, anarchy, the government controls everything. And then they go on this whole conspiratorial thing. And I'm like, this guy is crazy. And then later I'm like, a lot of those things were actually true.
Right, but that's true for every technology. The early days of the internet, guess who was the adult industry, right? Pornographers were the first to adopt it, and things like that. And I'm not saying that's bad or illegal, but the point is, any technology, bad actors will try to exploit it, but it's just a bad actor. It's not the technology. It's not that it's inherently bad. And this is where people sometimes they don't understand those concepts because they're not paying enough attention, right? Many times people just read headlines, and that's why Jamie Dimon knows how to play the game, right? Bitcoin's this is a scam. Anybody who touches, I'll fire it. But to your point, you were saying they were doing it early. Guess what they were also doing in 2016 and 2017? They were working with Consensus, which was building Ethereum. They built a private version of Ethereum called Quorum. They launched JPM Coin, which is a private stable coin within their banking network. They've been involved in it. But the point is, Jamie's playing the game, the smoke and mirrors, right? Yep. It's a scam. Don't look at it. Don't touch it. They're positioning themselves and they're setting up ways so they can make money off of it. Because if they can't make money off of it, they're not going to.
They don't want anybody else to.
Exactly.
Yeah, absolutely. No, I love that. And this is really, really fun, great conversation. I guess one of the questions I have for you is, tell me a little bit about your book, who that audience is, and kind of where you think that crypto is going over the next period of time. Maybe give me a little bit about what you think this cycle will look like. Because I saw a tweet that you put out, might have been yesterday. I believe it was yesterday, that kind of surprised me. And it was like a chart, and it said, we are here. And maybe that was only talking about Bitcoin, And so alts might still have a chance to run, but I felt like maybe we're getting closer to the end of this cycle than I thought. So I want to get a little bit of your insight on that and what you think, like the long and short term, and then about the audience of your book.
Oh yeah, absolutely. So let's talk about the market cycles. So I think as a foundational element, people need to understand what is Bitcoin and the crypto asset class correlated to, because there's been many theses and theories over the years. One was the halving, the Bitcoin halving every 4 years, the supply gets cut in half. There's less supply out in the market. There's a supply shock. But what we've seen is that Bitcoin runs with other assets like the stock market. But what is driving all of this to go up? Why do stocks go up, right? Aside from companies doing well and they launch a new product and revenues up. But that doesn't happen all the time, right? Just look at in COVID when the economy was shut down, the stock market ripped. Why? I asked that question because I had to learn that because it confused the hell out of me for so long. And then in parallel, why is Bitcoin running up, right? What's going on? It's all correlated to money debasement or currency debasement, excuse me. The more the governments print, and they printed a record-breaking amount of money in 2020, the more asset prices go up. That's the correlation. And you can look at the charts. This is backed by data. In the fiat currency system, as they keep printing, this is where asset prices go up. So whether we're talking about real estate, crypto, stocks, or gold. So you may say, well, why do I need to invest in crypto then? Well, crypto is going to, and blockchains are going to suck all those assets to put them on chain. And Paul Tudor Jones, billionaire Paul Tudor Jones, said it best in 2020. Bitcoin and crypto is the fastest horse in the race. Yes, you can invest in real estate. Yes, you can put in the stock market, but nothing moves like this asset. And that is because it's truly global. It's 24/7 and anybody can participate. Some folks may not understand that not everyone can access the New York Stock Exchange. Not everyone can buy Tesla stock. So that limits the pool of capital that could come in. Plus, you have opening and closing bell, holidays, weekends are closed. But the crypto asset class, it moves faster. Yes, it's more volatile because it's young, but it's maturing, but it moves faster. So where are we right now? I believe we're in the final phase, the fifth wave, as some would call it, using Elliott wave chart analysis. Now, the fifth wave doesn't mean, okay, the bull run's ending next month. It happens maybe over 5 to 6 months. And this is based on historical patterns. Now, could that change? Obviously, there's no guarantees or certainties when it comes to investing. We're talking probabilities. But based on, stimulus from China and global liquidity, the amount of money in the system globally that's going up, we're seeing Bitcoin and the stock market and everything's ripping, right? Now, as always, markets can't go up forever. There will be pullbacks. There will be corrections along the way. And if this 4-year cycles are playing out accordingly here, it means Bitcoin, I believe, can run into 2025. How deep? I'm not sure because no one can call the exact top. Yeah. So I
have to preface that. Mm-hmm. Richard Hart calls the top and the bottom of the last 2 cycles. That's what he says, anyways. So yeah, no, I'm sorry, you could continue, but I always jump back to him. He's one of my I think maybe one of the most charismatic characters in the space.
He's got some great calls. But I don't know the exact details. I've heard certain things like that. I don't know if he said, hey, the exact price will be this. I don't know if he said that, but I think most people, I think what Richard may have said is, hey, this thing is around the corner. It may top out in December. He may give like a time range. The exact date and number, I don't think anybody can do that unless they're a time traveler or they have a crystal ball. But, he has, to your point, he has had some good calls. But, with regards to the cycles, yeah, we could see this thing wrap up in 2025. But as always, you have to pay attention to the charts. This is where financial education comes into play. And even family members and people who ask me, hey, how do I invest? I'm like, okay, first start reading the Bitcoin white paper. Then I need you to go to TradingView. I'm going to send you some charts. I want you to take a look at it and tell me what you see, just logically, right? What do you see on this chart? And they often see, well, I see the peaks and the valleys. And I say, okay, so you see the market is cyclical, right? Same thing with the stock market. So you have to look at different indicators, look at the timeline, And that has to be your basis, your foundation. It can't be your gut. It can't be your feelings or emotions. Let's use the indicators. Let's use the technicals. So once you understand what Bitcoin is and blockchain is, and that has helped a lot of people to better navigate the markets and invest. So I personally think Bitcoin's strong run up right now, we are in the final phase of that parabolic move. It could go into Q1 of 2025 a bit later. It just depends on how the corrections happen. But don't be surprised, potentially this thing blows off in December, right?
Mhm.
Or January. And this is where I tell people, have a plan, know what price points you're taking profit at. So if it comes sooner or later, you have a plan. And obviously probabilities, there's no certainties and guarantees. You have to keep that in the back of your mind. Unfortunately, we are conditioned that we need to know that certainty. We need to know that it exactly goes to here at this point. That's not investing, right? There's a saying, time in the markets is better than trying to time the markets. So is there like some crypto I didn't sell in last cycle that I still hold and is up significantly? Yeah, because I couldn't time everything accordingly. I'm like I said, I don't have a crystal ball, but I tried to take as much money off the table as the bull run goes up and get some great returns and walk away from the bull market with profit. So I believe a bear market will return despite all the great things that are happening, ETFs, Trump, and all that, because markets move in cycles. And there's some warning signals, from a recession standpoint, what bonds
Yeah.
are doing and the amount of money printing. So you have to look at the picture holistically.
I think I've been saying for a while that global recession, I think, is pretty inevitable just because of the amount of money that we've printed. And when you look at how the interest rate on the debt is of America, which America tends to send or tends to affect the entire global market, and everybody else owns a lot of investment in America as well, and vice versa, holds a lot of dollars. Yeah, I think it's inevitable. This is one of the conversations that I have the hardest part talking to my dad about because my dad is considerably older. And like during the COVID crash, that was one of the things I said is like, listen, they printed so much money. And so, global recession is right around the corner. It doesn't really matter the timeline, it's going to happen. And he's like, what do you mean? The stock prices are going up, housing prices are going up, right? He's like, the value of things are going up. The economy is good. If it was bad, all the economists would be talking about this. You think these smart people on the television aren't going to be telling us about this? And my opinion on that is just kind of like, well, the smart people on the television are not the smart people making large capital decisions for massive funds and companies that the alpha that they have is kept behind closed doors, right? And
Right.
before a global collapse or a massive market collapse, there is a parabolic run up of
Mhm.
fake value, and then the smart people take the value out of the market to leave the regular people holding the bag. And you can look at every time. Like when the banks had to be bailed out and
Yep.
when the housing market crashed, the big companies never lose. It is the people and the individuals that lose. Because if a company goes bankrupt, they just close their doors and then they spin up a new LLC with all the same assets. I mean,
Exactly. And this
yeah.
is the financial education that's so important, right? You're trying to share it with your dad. I try to share it with my parents and my family members. Like before we get it, and then sometimes their heads are spinning because they ask me about crypto, but I'm like, you need to understand what's happening with how the money system works. And because at the end of the day, Bitcoin, the ethos of Bitcoin, it was created to be a hedge against that, right? It was the reason Bitcoin was created, the bailouts, the fiat money debasement, and so forth. And people really need to understand that because right now, many of them just see this shiny thing and they're like, oh, I can make money. But you have to understand what's happening. You have to understand the ethos. And that's part of why I wrote the book, Rethinking Crypto, The Crash of FTX. It talks about that. Why Bitcoin? Why blockchain? Why should you care? Yes, there's an opportunity to make money, but also you can be an entrepreneur. You can go work in the industry and change your career. And also, one of the things I was coming across, even from my own family members and friends, didn't Sam Bankman-Fried kill Bitcoin? Didn't he steal all the Bitcoins? That's the perception they have. And I'm like,
Yeah.
man,
No.
And because it was such a high profile case and it got such visibility in the press and so forth, people were reading the headlines and they're like, wow, this crypto stuff I knew was a scam. I
Yeah.
knew, look at this guy, he stole all of it. But they don't understand. Guess what? Sam Bankman-Fried was just a bad actor. The United States failed to put proper regulations, so he was operating out of the Bahamas. He was meeting with the SEC. They didn't do their due diligence. So part of this
And
was the
political candidates
exactly.
donating a substantial amount of stolen funds to them. And then, I mean, we haven't been hearing about in the news XYZ candidate gave back XYZ money to the creditors, you know what I mean, of the FTX case and so on and so forth. And it's just absolutely crazy to me because the only reason he was able to successfully pull off as much of that scam as possible is hiding the activity in very complicated traditional legal structures. If the entire thing had been done on the blockchain, and some people did raise red flags, but
Mhm.
you would have been able to see all of the strange activity that didn't match up. You would have seen the inaccurate balance sheets, right?
Mhm.
Essentially, like live on the internet, and would have been able to mitigate your risk. Yeah.
Yeah, and I the book helps people to educate them about what happened. Like you have to delineate between a bad actor and the technology. Essentially, it highlights, hey, look, while all this was happening, the Bitcoin blockchain never went down, Ethereum never went down. The networks kept working and processing fees. So you have to understand, and that if you were self custodying, FTX didn't do anything to you, right? Except maybe the price took a little more of a dip because of the bad news. But we were near the bottom of the market, December 2022. But as someone who's self custody, I didn't lose any sleep. I was fine, and that's a really amazing feature of crypto. And yes, are there legitimate custodians and companies out there? Absolutely, they have insurance, they're licensed, and all that. But FTX, I gave the analogy. Sam Bankman-Fried was the Bernie Madoff of crypto. Bernie Madoff in a regulated market, John, in a regulated market with very smart and sophisticated people, was stealing money, right? Running a Ponzi. And obviously this was part of the lead up to 2008 because it was so over levered. But the point is, bad actors, bad people exist in our society and civilization. That's a tale as old as time. But we have to be educated. We have to be financially educated to understand, hey, I can self custody. Hey, here's how the market cycle works. Here's how money printing affects my assets and my money sitting in the bank account. And when you have those foundational pillars of knowledge, you're able to, better navigate markets and understand them better.
Absolutely. I think that's super valuable. And anybody that hasn't read this book yet, I think you should definitely go out and read it. I feel like crypto is a very difficult, all encompassing market and philosophy and kind of theology in order to understand in general.
Mhm.
Um, at the beginning of like blockchain based certifications coming out just a little while back, I spent like it was probably like 3 to 4 times what they're charging now for these courses, and realized that I had learned exceptionally more by like getting my feet wet, following smart people on YouTube, and actually partaking in the market, using the decentralized applications, using the services and goods. I was able to understand more than actually paying some of these educational institutions to learn.
Yeah.
And then, so like books like yours, books like the Bitcoin Standard, I think that those are some of the most, I think, pivotal works as far as this market for people to really get an understanding of what's going on. So, everybody out there, I'm going to put the links to the book, all your socials in the comments, and I would urge everybody to go check those out. Um, let's see. So, in this market, what would you say are some of your perhaps largest holdings? Maybe not largest holdings, but which projects are you the most excited about that you think will likely outperform? And I'm not going to hold you to it because I know this market is absolutely, you know, I don't know, a little bit sick in a way, but sometimes it's a little exciting and fun too.
Oh yeah, for sure. And look, not financial investment advice, but let me start out by just saying, study the risk curve. If you're watching this after this, go learn about the risk curve, right? So if we use the risk curve model for Bitcoin and the crypto asset class, Bitcoin is the least riskiest asset in the crypto asset class. As you get into altcoins, and then they eventually to meme coins, right, John?
Yeah.
It becomes even riskier. So you have to understand that aspect of it, and which coins have been around for a long time, have made it through multiple cycles, versus a coin that was started last night, John, by some guy in Russia or last month. So you
Yep.
have to make sure that you understand the history of these tokens. Think of them as you're looking to hire someone. You go through their LinkedIn profile, you look online to see, is this person a shady person? You do a background check and all those things. So you have to do your due diligence. With that said, my crypto holdings, I have Bitcoin. I position myself even more on the Bitcoin side this cycle around because of the ETF buying, and that has paid off already. My second largest, I have like XRP, and because I saw from an investment standpoint, not any other reason, but that a depreciated asset still stayed in the top 10, even though the SEC filed a lawsuit and now has come out victorious. And now ETFs are being filed for it and things like that. I have Solana, I have Ethereum, and a recent addition to my portfolio is SWI.
Gotcha.
After I interviewed the founder and seeing a lot of VCs were
Ooh.
bullish on this project, I decided to take a big bet on it. And then I have some other ones like AI tokens like Fetch, or which is now ASI, Render, and
Yep.
so forth, because I believe AI is a big narrative.
That's awesome. I think that those are definitely some good picks. One of the comments that I'm going to make, though, is that I have a theory and a very strong belief that I think that a lot of the VCs that backed Solana, I think that they're probably going to pump Solana. And then
Yeah.
I think a lot of that liquidity is then going to roll into SUI. And then I think SUI will probably outperform. That's just like some of the rumblings that I'm hearing
Yes.
behind the scenes, and I'm excited about that. And I will say that so on this channel, we've been doing a DCA portfolio into some of these projects. I think we have like 10 tops that we're investing in every Friday. Cetus is our largest bag now. And so Cetus, if you don't have that one in there, is one to look at because it is the largest DEX on SUI. And so that's basically a leverage play on SUI. SUI usually runs pretty hard. And then right after that, Cetus usually goes pretty good after that. But so that is just, I think those are all really good picks. And that's interesting, though, that you're probably trying to preserve capital at this point. So not necessarily shooting to like make it like exponentially. Because I feel like for a lot of people that have very small capital, the
Sure.
the higher risk plays are kind of the
Yes.
direction that you almost have to go. Because like for me right now, like I can't buy a whole Bitcoin. You know what I mean? Especially not at this price. And I mean, even at 15,000, where I was telling my parents, hey, you should pick up two. And they're like, oh, you're crazy. I I wasn't in that place. So like for me, the strategy has been altcoins and not Bitcoin, because it's like I need to create that capital and then hopefully I can buy, a Bitcoin or three for my kids, you know what I mean, before during the next bear cycle.
So to add
Yeah.
some context, so that exactly what you're saying, this is my third go around. So I've been building the pot, so to speak, right? I've been growing the pot and the pool of capital for me because I made money in the last cycle. So some of that profit I took and paid off debt. I did some lifestyle things, whether it's travel, blah blah blah. But I took a good amount, reinvested in the bloody bear market. So the pot is growing. That is my strategy. I'm not saying people have to follow that, but my plan is to squeeze as much juice out of this orange as possible. And the profits I take from this cycle, guess what I'm going to do? Some of it reinvested in the 2026, 2027 bloody bear market, position myself for the next halving and next cycle.
Yes, that's fantastic. Look, Tony, I appreciate your time so much, and I have so many things I want to talk to you about off air. So we'll have that conversation. But is there any final thoughts or things that you want to share with the audience? I appreciate you so much for joining, and I definitely want to get you in contact with the Radix Foundation. Very interesting blockchain. I think that you'll like to hear about some of the things that they're doing. And then I also would like to see if you can get me in with Sui, because that would be a lot of fun for me for sure. And our project has been talking about Sui for so long. It's exciting. We like it. Maybe we'll build something over there. We've got some things that we're thinking about. So I appreciate you for coming, but what are your final thoughts?
Yeah, absolutely. Happy to help facilitate all those things. And, I would say everybody, that we're entering the final phase. Things are going to get euphoric. Have a plan. The feeling of greed will be so high. And I say that as someone who's been here, once again, multiple bull market cycles. And it will seem like it won't stop going up, like it's going to go up forever. But have a plan, know what price points you're going to take profits at so that you walk away from the bull market with money. And if you're walking away with a good return, then it doesn't have to be $1 billion. Even if you don't become a multimillionaire, that's okay. You're walking away with profits. That's a win. That's a success. And look at reinvesting when the bloody bear market returns. Remember that principle. We'll study Warren Buffett and all these guys. They buy depreciated assets when they're down. Now, obviously, there's different variables and factors. You have to study the projects and so forth. But have a plan and enjoy the ride. Enjoy the ride. It's going to be fun.
All right. Thank you so much. And I appreciate you for joining us. We'll see you. I would love to have you back sometime soon. And then we'll maybe towards the top, we'll be calling it.
Yeah,
so,
for sure. Thank you for having me, John.
Thank you so much. Peace. All right.